And with a recession seemingly on the way, investors may think there's no good place to invest. But extend your investing horizon, and 2023 could set you up for good returns later on. So in this video, we will discuss the best investment ideas in 2023. Hello, and welcome back to OFW Wealth TV, my YouTube channel. Hit the subscribe button and press the bell icon for more informative and unique videos. Let's get started. Why invest? Investing can provide you with another source of income, fund your retirement, or even get you out of a financial jam. Above all, investing grows your wealth, helping you meet your financial goals and increasing your purchasing power over time. Or maybe you've recently sold your home or come into some money. It's a wise decision to let that money work for you. While investing can build wealth, you'll also want to balance potential gains with the risk involved. And you'll want to be in a financial position to do so, meaning you'll need manageable debt levels, have an adequate emergency fund, and be able to ride out the ups and downs of the market without needing to access your money. Best investment ideas in 2023. 1. High-yield savings accounts. Overview. A high-yield online savings account pays you interest on your cash balance. And just like a savings account earning pennies at your brick-and-mortar bank, high-yield online savings accounts are accessible vehicles for your cash. Who are they good for? A savings account is a good vehicle for those who need to access cash shortly. A high-yield savings account also works well for risk-averse investors who want to avoid the risk that they won't get their money back. Risks. The banks that offer these accounts are FDIC insured, so you don't have to worry about losing your deposit. While high-yield savings accounts are considered safe investments, like CDs, you do run the risk of losing purchasing power over time due to inflation if rates are too low. 2. Short-term certificates of deposit. Overview. Certificates of deposit, or CDs, are issued by banks and generally offer a higher interest rate than savings accounts. And short-term CDs may be better options when you expect rates to rise, allowing you to reinvest at higher rates when the CD matures. Who are they good for? Because of their safety and higher payouts, CDs can be a good choice for retirees who don't need immediate income and can lock up their money for a little bit. A CD works well for risk-averse investors, especially those who need money at a specific time and can tie up their cash in exchange for a bit more yield than they'd find on a savings account. Risks. CDs are considered safe investments, but they do carry reinvestment risk. The risk that when interest rates fall, investors will earn less when they reinvest principal and interest in new CDs with lower rates, as we saw in 2020 and 2021. It's important to note that inflation and taxes could significantly erode the purchasing power of your investment. 3. Series bonds. Overview. The U.S. Treasury issues savings bonds for individual investors, and an increasingly popular option is the series bond. This bond helps build protection against inflation. It pays a base interest rate and then adds on a component based on the inflation rate. The result, if inflation rises, so does the payout. But the reverse is true. If inflation falls, so will the interest rate. Who are they good for? Like other government-issued debt, series bonds are attractive for risk-averse investors who do not want to run any risk of default. These bonds are also a good option for investors who want to protect their investments against inflation. However, investors are limited to buying $10,000 in any calendar year, though you can apply up to an additional $5,000 in your annual tax refund to purchase series bonds too. Risks. The series bond protects your investment against inflation, which is a key downside to investing in most bonds. And like other government-issued debt, these bonds are considered among the safest in the world against the risk of default. 4. Short-term corporate bond funds. Overview. Corporations sometimes raise money by issuing bonds to investors, and these can be packaged into bond funds that own bonds issued by potentially hundreds of corporations. Short-term bonds have an average maturity of 1 to 5 years, which makes them less susceptible to interest rate fluctuations than intermediate or long-term bonds. Who are they good for? Corporate bond funds can be an excellent choice for investors looking for cash flow, such as retirees or those who want to reduce their overall portfolio risk but still earn a return. Short-term corporate bond funds can be good for risk-averse investors who want a bit more yield than government bond funds. Risks. As is the case with other bond funds, short-term corporate bond funds are not FDIC insured. there is always the chance that companies will have their credit rating downgraded or run into financial trouble and default on the bonds. To reduce that risk, make sure your fund is made up of high-quality corporate bonds. 5. Value stock funds. Overview. These funds invest in value stocks that are more bargain-priced than others in the market. Who are they good for? When stocks run up in valuation as they do from time to time, many investors wonder where they can put their investment dollars. Value stock funds may be a good option. Value stock funds are good for investors who are comfortable with the volatility associated with investing in stocks. Investors in stock funds need to have a longer-term investing horizon, at least 3 to 5 years to ride out any bumps in the market. Risks. Value stock funds will tend to be safer than other kinds of stock funds because of their bargain price, but they're still composed of stocks, so they will fluctuate a lot more than safer investments such as short-term bonds. 6. Rental housing. Overview. Rental housing can be a great investment if you have the willingness to manage your properties. To pursue this route, you'll have to select the right property, finance it or buy it outright, maintain it, and deal with tenants. You can do very well if you make smart purchases. With housing prices cooling off in 2023 and mortgage rates off their highest levels, a strategic purchase of real estate could work out well in the long term. Who are they good for? Rental housing is a good investment for long-term investors who want to manage their properties and generate regular cash flow. Risks. You won't enjoy the ease of buying and selling your assets in the stock market with a click or a tap on your internet-enabled device. Worse, you might have to endure the occasional 3 a.m. call about a burst pipe. 7. Dividend stock funds. Overview. Dividends are portions of a company's profit that can be paid out to shareholders, usually every quarter. So dividend stocks are those stocks that offer a cash payout, and not all stocks do, while a fund packages up only dividend stocks into one easy-to-buy unit. Who are they good for? Buying individual stocks, whether they pay dividends or not, is better suited for intermediate and advanced investors, but you can buy a group of them in a stock fund and reduce your risk. Dividend stock funds are a good selection for almost any kind of stock investor, but can be better for those who are looking for income. Bottom line, investing can be a great way to build your wealth over time, and investors have a range of investment options, from safe lower return assets to riskier, higher return ones. That range means you'll need to understand the pros and cons of each investment option and how they fit into your overall financial plan to make an informed decision. While it seems daunting at first, many investors manage their assets. So guys, that's all about today's topic. See you soon in the next video. Goodbye.